My heart is catching fire. I just feel so fine with this fire, this fire, this fire.
Right, we're just on time now. Welcome traders, good to see you all. Today we are diving into adapting to the market's pulse. Well, we have tentative data that's supposed to come out. That was the retail sales live. Very grateful for your support, those of you that are tuning in. I'm very grateful once again. We have an amazing community growing, and we have about 10 minutes before we have some kind of news release. That's if it will be there. Just before we even start, I want to know that we are using before we start, use my promo code, guys, TSTREAM, to get 100% bonus on your fast deposit. That is very essential if you are a newbie there and you don't want to use your money, you want to leverage on that. We have about 10 minutes before the expected release window, so let's look in the fundamentals. This is our second week with this American government shutdown, and it has definitely affected a lot of financial market moves that I've been targeting. Well, if you're tuning in from wherever you are, please leave a comment in the commentary section. We have a chart there, so you might want to ask some questions. I get a lot of questions, and that is really good because it keeps me going. There's so many out there that are eager to learn, and it's very crucial that you learn how to trade, or you just learn about the economy, global economic dynamic from professionals. So why is today a little unusual? As you can see, I have my gold chart open. Well, it's a little unusual because we have tentative data plus a shutdown. Now, you see, retail sales, we had some retail sales here in under 6 minutes. Retail sales are, and PPI data, according to the official website here, the US Bureau of Labor and Statistics. I'll just refresh my page here, and we should get some where is it? There you go. We have publications, the Economics Daily. We have that. We have the where is the calendar without wasting time? Used to be somewhere here. Latest releases. There you are. So we have a consumer price index. Well, consumer price index. That is September. Now we'll be refreshing this page, nevertheless. Now, just to highlight the ongoing US government funding, right? Uncertainty and rolling shutdown risks have really disrupted data collection across federal agencies. So the probability of another non-release is extremely high. That's why Forex Factory and whatever other sites that you're using quickly remove this towards the release. Now, this creates a strange environment for the charts, choppy markets, where the market, doesn't really react to the numbers, but to the absence of numbers, we surely have some moves coming up. Now, we've had employment change, unemployment rates for the Australian dollar previously. We picked up on those moves, and we want to see how to play today's session. We've had an incredible profitable week and 2 sessions previously. We'll be integrating this one into the last New York session. Now, what retail sales actually measure and why does it matter? This is the 3rd time we are going over retail sales. Let's talk about retail sales really. What is it? What is it? In the comments, you could write your definitions there. But for the sake of time, retail sales simply measure the total change in spending at stores, online shops, gas stations, groceries, everything the consumer touches. You and I, you go to the shop, get some milk, that is consumer spending. It's the simplest and purest measure of the US consumer's strength, right? And why does it matter? Very simple. Because you see, the US economy is consumer driven. Why do we know that? Because 70% of GDP comes from household spending, right? And when retail sales rise, the economy is expanding. So, producer price index, we could check that. Let's see what's happening monthly. We have consumer price. Let's see, where is that? Retail sales. Retail sales should be around here. Okay, so we have major economic indicators. Consumer price index is set for, tentative. All right. So once again, you could go scroll around, play around with the official website, look at what it really means. The definitions are there. And like you could see, all items from food to energy and so forth. Now, you see, when retail sales fall, momentum collapses and there's a recession risk increment. We have core retail sales. This is simply the same, but it removes autos because car sales are very volatile and distort the trend. They distort the trend. So when you hear about core retail sales, it's simply giving you the heartbeat, the headline, giving you the whole body. So this just gives you what is needed, what is happening at the micro level. And through that way, we are able to pretty much speculate on the price of the dollar. And in that regard, in that background, we have some kind of edge. However, the data takes time to be priced in. Sometimes it's priced in earlier. And retail sales, what does it mean in terms of the Fed policy? Now, let's try and connect today to what we've already seen this month. CPI previously CPI, where is that site? There you go. Yeah, previously CPI we only had for October, right? We're in November now. CPI earlier showed those sticky inflation pockets again, right? Services inflation, shelter inflation, and components tied to wages. So this is important because inflation tells us what consumers pay, while retail sales tells us what the consumers do. That's a very big one. What consumers pay versus what they do. So for example, if CPI is hot, but the retail sales fall, that represents some kind of stagflation territory, right? And the opposite, if CPI cools, but retail sales rise, that's healthy demand. You could go and check out some of my videos where I explain this in detail. And if both of them fall, then a recession signals, while if they rise, there's some kind of overheating. So this is why today's data matters. To the Fed, retail sales gives the demand side of inflation equation. Now, let us look at today. So far, we don't have anything. Whenever we have something, a scenario like this, we want to look up other news sources, right? And the easiest way is to check out some news sources. We do understand that there is a shutdown, and last month we knew that retail sales were softening. Consumers pulled back on discretionary spending while leaning harder on credit. So this means that the market was expecting a weaker number. A weaker number, right? Right. We're expecting a weaker number, maybe even negative. We'll have to wait for that. But according to the shutdown, we understand that tallying up the cost of the longest shutdown, we understand that a bill has been signed. So we're likely to open the next week. Now, remember, if the data is bad today, rather, if we had data today, it would confirm whether the consumer is stabilizing or slipping. So because it's tentative, as you could see, we have nothing going on. That will actually ease our session. So no panic, no rush. The lack of data becomes a message of uncertainty, and we like that. As professionals, we like chaos, we like uncertainty. It's very unethical, but what is going on in the context of global wars, this moves the market. Pretty much Wall Street basics. Now, when we check Twitter, I really encourage you all to get yourself a handle there very quickly. Doesn't have to be your private handle, but you might want to check that. It's very important to check out Twitter during such times. We have a lot of, I'll pin some of the channels to follow. We have, we want to check out Fed Watcher sentiment, Trader Desk commentary, right? So we have Fed Watcher. Let's check that out. You could start with the Federal Reserve, refresh the page, check out what's really happening. You could see this is the official Twitter channel of the Board of Governors of the Federal Reserve. So 16 hours before, we had some interactive guide. The balance sheet report, nothing really special there. We have also, you want to check out liquidity warnings. So if data is absent, Twitter is usually the first place that shows it up. Now, a quick pulse on Twitter. Let us look for retail sales and PPI actually dropping. So the first one is financial juice, right? Financial juice. You could look at this for any explosive moves. We have 2-minute Canadian wholesale MUM actual. This, so it's 0.6. You could come back to Forex Factory, refresh the page and see. And October. Why are we going to October? Today's November. Beautiful. And you could say wholesales 0.6 wholesales for the Canadian dollar, that from the X account. 0.6, the forecast was 0, so we have Canadian wholesales at 0.6, and it exactly confirming what we have just seen. So play around with Twitter. There's so many interesting channels, like the handle for live, it's called Live Squawk. So here is also up-to-date financial market news. I'm not going to go through all of them, but you could see that everyone is focusing and concentrating on the Canadian data. Reason being is the Fed hasn't yet released anything to do with the US data. Now, there are many others like BLC. This is a very good one for everybody. BLC government. Here you have some stats, statistics, making informed decisions. Look what they're saying. Here's a quick explainer on CPI imputation. So you go over this during your free time. We have other sites like Deltaone, or that's, you know, if there's any hint on release or delay, you could check that. We have Deltaone. That's a nice one as well. I used to use that a lot. So we have Deltaone. Now you could check that out and see what they're up to latest. Everything has been lately on crypto. Yeah, we have that, and we have the terminal is another. Yeah, I'm just remembering off the back of my head. The terminal, that's a Bloomberg terminal, also a good one. You could check that out and just scan. So there's a terminal for X, and you can also get that. It's a nice way if you have multiple screens and you're just checking out, scrolling through some of the tweets, Trump tweets and whatever. We have another one called Charlie B. Charlie, what's it? Yeah, there you go. That's a chief market strategist, investor, writer, reader, thinker. You know, just follow these guys, follow them. They have really nice insights just to get the sentimental part of the financial markets. That's a very big one. For inflation pressure, you could also look at that. We have GX, Shefe, and FX Macro to separate real moves from thin liquidity noise, plus a glance at the blockchain cent for risk mood alignment. Nothing fancy, guys, just a clean sentiment scan so we know whether we're trading data or we're trading the mood. All right. Don't forget, the theme of this video is adapting to market's pulse, right? We want to understand where we are in the market. We want to understand market behavior and how to set ourselves with the right probability to enter trades. Now, my pocket option setup is here. Before we have measures, I've outlined my measures there, and just, you know, in pure waiting mode. Hesitant candles I see. You want to check out the daily. Very choppy markets, of course. For the USD JPY, we have choppy markets. Gold has been same. Euro USD, very stagnant. You want to refresh that. Nothing really much, guys. It's Q4, and you know, companies are wrapping up. We're heading towards Christmas. You could see that pullback on oil. So this is classic pre-macro environment, all right? When the market expects news but suspects a no-show. Now, this is what's happening behind the scenes, trying to map out a strategy from a fundamental perspective. Having informed fundamental decisions is very refreshing. And so we do understand that today we will not have any retail sales, no core, no PPI. So we have confirmed that there is no release scenario. Now, this is where amateurs panic and professionals stay still, right? So let the market clear liquidity first, if any. I suppose that we will not have any significant moves. But, however, something could come up this weekend. That is Saturday and Sunday. Now, without retail sales, the market now uses CPI as the anchor. CPI told us inflation isn't dead, but without retail sales, we don't even know whether consumers can sustain the pressure, right? What does that create? It creates a perfect environment. If you look at the charts, very good environment for fake outs, right? Fake outs, you could have your lines, fake outs, lots of fake outs, and these are what we need. We need fake outs, we need retracements, we need choppy markets. So market grab stops on both sides. That's very typical, basic for experienced and novice. If you're coming in, you want to understand that. So before establishing any real direction, sentiment now is key. Without any kind of data, everything simply becomes sentiment driven. And globally, sentiment is very fragile. Why? A tightening Fed, Middle East tensions, China's slowdown, we have Europe's stagnation, we have US political gridlock, holiday season spending uncertainty, consumers stretching, to the limit. So what does that create? It creates a risk of, by default, mood until proven otherwise. As simple as that. Right? Seasonal tendencies. Looking at the monthly performance heat map and some of the currencies and how they behave. So November, all right, Canadian, we'll be concentrating on that because Canadian dollar came out, so it was pretty for the sake of scalping. November, usually retail sales normally surge heading into Christmas. But this year, the dynamic is a little different. We don't usually get this kind of dynamic because people don't have savings. You had the stimulus check for $2,000, Credit card APRs are at record highs. Buy now, pay later usage is exploding. So professionals know, they really know, seasonality doesn't override fundamentals. It simply amplifies, right? Just amplifies them. So if the consumer is weak, seasonal spikes look very artificial. And you could see that on the charts. Well, institutionally, we don't really care about these charts with opens and lows. We just monitor, and once again, there's no other better way to get the true market highs and lows. And you could check that out. Come to currencies, look at highs and lows. There you have it. Plot them out, chart, and look for a nice clear chart. All right, map them out, map the real levels. Professionals once again know that seasonality doesn't override. So if consumer is weak, seasonal spikes once again look at artificial. Now, how does a professional like me and others and people that have been here for a while, how do we really read price on such days? Simple. The pros read reaction. We don't read any kind of prediction, right? For instance, today gold, looking at the gold, right? Showing some kind of fear, right? We failed to break these. All right, my chart is a little weird, glitchy, but I'll have to refresh that. If you look at Euro USD, for example, it shows some kind of instability on the daily. You see, just a weird choppy market. Now, looking at the alts, if you refresh that, we had a spike at the start of the week and we're back at 43. Now, the Bitcoin alt season is at 43. And, that is some kind of speculative mood. Twitter narratives, you could see that the flow narrative, you could try to pick up a few hints over there. And yields are showing true market positioning. Now, confirmation back to Twitter. All right. Now, Twitter is quiet. usually you get a lot of notifications on all these pages, and it's a little quiet. No one's posting. I look at Trump's official page as well, if he's there. Let's see. Let us see. What is his page here? Similarly, nothing really speculative. So I want to believe most of the action is has shifted to crypto, and no Fed leaks, no BLSL updates. Let's see, no update yet. Last was 24th of October. So there's no hint of any emergency data drops. This means the market will continue reacting based on the broader macro mood. Right. So we're just trying to, like if you have any pets, if you've had a parrot before or a dog, you could sometimes sit down and just watch them and try to understand them. Sometimes you see animals and they're pretty much sad or happy. You could tell. It's the same thing here in markets. If you have a specific instrument that you understand how it behaves over time, you've back tested, it gets even easier. So these behaviors tell us exactly how each asset class digests uncertainty. Right? You see, so much choppiness. And of course, if you want to gamble, please, you could go in and out. And for the sake of today, let us try and dissect the market mood, right? Now, around this point, the market usually picks a direction. You want to use an indicator called the what is it called? We usually use the true range, and where is that? Average true range. Yeah. Look at the average true range on a daily and look for extremities, right? Extreme levels on a daily. If you see anything on the extreme, it is a nice indicator that you exactly like Australian Canadian dollar. Now we're at the extreme on the daily, and that just simply tells us we might have some kind of exhaustion. And that exhaustion on a little time frame might bring some kind of pullback. Now, I'm just trying to explain what my mind thought is, my trading ideas when I'm scalping. There are two different mindsets when you're scalping and when you are trying to enter a position. Now, today the direction comes from the CPI shock earlier this week, the missing retail sales clarity, and the risk environment around geopolitics. So what is the pulse? The pulse is uncertainty, no numbers, there's no mood. That's the conclusion today. There's no mood in the financial markets, and that simply gives us a chance to journal. All right. Journaling is very important, and there's no reason to jump in today. We have 3 sessions. If there's any entry, that has to be in the New York session. Now, the time right now, according to our world time clock, is 1:47 p.m. All right. So I wouldn't want to enter any time now until we are right in the hot spot, the sweet spot, and we have New York around 9 a.m. So between this this window of 8 o'clock and 9 o'clock is more or less preparation, and all the moves should be locked in by 9:30 New York, right? All the scalps, all the games, you just want to enter, get out. Don't even think about holding on 2 positions on a Friday without any certainty. No data, you don't want to risk that. You don't want to play that game, right? So it's as simple as that, guys. As simple as that. The breakdown, the mindset is key. We are simply waiting for the next wave. Now that we've understood that Canadian dollar data came in well, we had manufacturing sales. Now, the simplest bet could actually be, my simple bet could be between the USD and Canadian dollar. Reason being is one is, okay, we have an responsive page. Looks like there's a lot of traffic. Anyhows, you wanna pay attention to the Canadian dollar data coming out, right? Now let us see something. Let us see something. Okay, live squawk. China accuses Dutch of not resolving issues on Xperia. Where is that? We had some data here. Where is that? 19 minutes. Yeah, Canadian manufacturing, 3.3%. Wholesales, ex-petroleum, 0.6%. So visually, you could just move along with Canadian and USD. Another thing is, since we know that Australian dollar had very explosive moves previously, and together with the daily, it's at the extreme, we have an opportunity for exhaustion and a pullback. Now, that is where you might actually find some trades. You see there's a lot of gaps in here. So that is one way you could look at the, no, GBP, I wouldn't touch that. And there's no other place to confirm this other than bar chat. You could go to the currency section, look at the performance leaders, and, you know, look at the correlations, right? Correlations between the USD and the Canadian dollar. Where are you? Canadian dollar. Okay, I'm getting old at this, but let's see. Canadian dollar. Okay, you have the USD and Canadian dollar. Where are you? There you have it. So it's a little weak. All right, it's a little weak. We are at slightly below the open. We had a day high and we are right there. All right, if we move back, you want to compare that with another chart, like say Australian and the Canadian dollar, right? Australian and Canadian dollar. Let us see. So there are a lot of crisscrossing. You could have three correlative analysis where you check out the arbitrage pair, and we talk about this as well in my community, how to look at an arbitrage pair, and basing off that with some background information, you could place a trade. So Australian dollar, USD is fairly low. Let us see something. Okay, yeah, and you could just confirm that with the Australian dollar. So we are at yeah, there's a divergency there. There's a divergency there, and if you look at the red, we are right here, and you could see that the 2-year and the 5-year are pretty much close, while the 10-year is way far. So towards the end of the year, we see that gap, right? We could utilize that gap because we have 1.5 months to go. And if you're like a swing trader, you might want to capitalize on that. So there you have it, guys. We are left with about, let's see, yeah, 7 minutes into 9 a.m. of New York. All right. Canadian dollar on the 30-minute, 15-minute. So my pick today will be Australian and CAD. I'll go with that because it is the most decent. Oh, by the way, you could also open the VIX, right? The volatility index chart, and try to correlate that as well. Understand where you're heading. And once again, don't forget to use risk, guys. We don't want to waste any gunpowder here. The more you risk, the more, you lose. However, you could also gain, but there's no reason to rush. Allow me to finalize and wrap up. However, just join my community. The signals will be sent. There's no reason to rush, guys. We are not rushing. We will have some breakouts and probably some final signals. If you check out my community, we've had back-to-back wins. And it's very encouraging when I see many of you joining in, tuning in. It gives me a lot of motivation to keep doing this. Many of you are reaching out. Keep doing that. And there's a lot of free information on my channel. And don't forget, once again, to use that promo code. You get 100% on your first your first deposit. You could leverage that and plan your trades well. All right, this is not a sprint. It's a slow marathon of learning. Your learning curve has to be very laser focused. It has to be well guided, and you don't want to make any kind of mistakes that could put you in any kind of financial issues, right? So guys, I think that's it for today, right? It's been another great live breakdown. Today, I've showed exactly how to navigate markets. When fundamental data disappears, today has been a good example. How to read sentiment, right? How to read reactions. Check out Twitter, of X, former Twitter, right? Stay patient. You see, I'm not rushing, right? If you're trading today, later, make sure you join my community. I'll be sending 3 signals. And it's very important to watch the time and the seasonal tendencies. We have a lot of interesting articles in my community. You want to keep your mindset in check. You want to study some of these great minds, great traders out there, the psychology behind the markets. And it only takes time. You can't buy this. You need to do the work. You need to put in the work, put in all your effort, and understand this is a slow, gradual process. We're not gambling here. We're making informed decisions. And thanks a lot for joining. Stay flexible, guys. Stay disciplined and keep adapting to the market's pulse. It's your boy, Tony Trades. See you in the session.